The JMF Advisors Show is a podcast for business owners, C-suite executives, and entrepreneurs who are looking to build, grow, or even exit a business.
We bring in some of our best financial advisors to interview experts on business best practices, hot topics, and sprinkle in some tax and accounting help.
If you're a business owner, startup founder, CFO, or just starting your side hustle, this podcast is for you. All right, welcome back to the JMF Advisors Show. I'm Bobby Bragg. I'll be hosting today and asking a bunch of questions. We've got Rachel Taylor back. She's a shareholder in our tax department, kind of runs that show. Welcome back.
Thank you.
We've already touched on individual tax planning, so today we are focused on business tax planning for the end of the year. There are always things you can do and think about and assess this time of year, sort of the last quarter of the year before the end of the year, to start making some ideas, changes, whatever. And any high-level thoughts before we get started in some of these questions?
Yeah, when you're looking at what your business may look like in the fourth quarter, it's a good idea to look back and see, maybe compare to previous years. How does this year compare? Is it better? Is it worse? How does it line up with maybe what you projected that it would be? Because that's, if you're paying estimated tax payments based on the business performance, then it's good to know, have I paid in too much? Have I paid in not enough? So getting a good feel for how the year looks as a whole is a good place to start, and maybe projecting what you think is going to happen between now and the end of the year. Do you have big jobs coming up, or are you kind of on a decline through Christmas and the end of the year where you're just, getting geared up for next year, that kind of thing. So knowing what the year has looked like and then what the last few months or so will look like.
Right. So a lot of folks kind of go into the year going, well, I'm going to pay what I paid last year.
Right.
Over the course of the 4 quarters. That reassessment probably is a good idea.
That's right.
So if you're having a great year, that usually means you're going to pay more taxes as well.
It usually translates that way, yeah. It does.
All right, unless we do some of these strategies
That's right.
at the end of the year.
That's what we're here for.
So there's a lot of talk in the trade journals and whatnot about changes in bonus depreciation, and that's really changed a lot of things on a tax basis for a lot of businesses. So tell us a little bit about bonus depreciation and how those things are changing, how they affect the tax return.
Yeah, most people are pretty familiar with bonus depreciation. We've had different versions of it over the years. Sometimes it was 100%, sometimes it was 50%, and sometimes it would be in response to something that's going on across the country. I believe after Hurricane Katrina, we got a bump up, different things like that. Economic stimulation, that kind of thing. We would see an increase in the percentage allowed of bonus depreciation. Well, in the Tax Cuts and Jobs Act a few years ago, it was increased from 50% back up to 100%. So that's been in effect for assets placed in service beginning September 27th of 2017. Okay. So we've had it for several years, but even back then we knew it was not permanent. And now we're facing that time of, here we go, here's our change coming. So we've still got 100% bonus depreciation for 2022, but starting in 2023, it goes down to 80%. And it's going to go down that 20% step every year until it's back down to zero. So 24, it'll be 60% and so on from there. So the reason why that matters is because if you're used to purchasing assets at the end of the year, some people do that if they need a new vehicle or a piece of equipment and they can buy it at the end of the year to tack it onto this year's taxes. That's not an uncommon practice. And you can still do that. And this is a good year to do that because you can still get the 100% bonus depreciation. So it's helpful for people knowing if you're deciding between end of this year, beginning of next year, that difference in bonus depreciation may determine when the timing, what the timing of your asset purchase will be.
Right.
So that's going to be a big change for us.
So explain this part to me. So if I buy it at the end of the year, it's 100% depreciable this year via bonus depreciation. If I wait until the beginning of next year, it's 80%. The 20% that is not allowed in the bonus still is depreciable, correct?
Correct. It'll just be the regular, whatever the life, it's a 5-year asset, piece of equipment, or 7-year, you would depreciate that 20% over that 5, 7, 15
Right.
years. So it's going to have two parts.
Right.
Kind of, yeah.
So you still get the opportunity
get
to
it.
depreciate. It's just slower.
That's right. That's
Okay.
right. Yep. You don't lose it.
Just making sure I had that right in my
It's a
mind.
good question.
Yeah. Okay. What other things are big for businesses?
And this is not really so much for this year, but it's just a planning item for next year. Hand in hand with the bonus depreciation change is going to come probably more people looking at Section 179 expenses. That's been around for a long time. That's not anything new, but since bonus depreciation was increased to 100%, most people haven't really used Section 179 as much, because while you still get the 100% depreciation like you do with 100% bonus depreciation, Section 179 just has some more limitations on it. So all things being equal, bonus depreciation is typically better if you can get the full 100%. Now that for next year, for 23, now that it'll be going down to 80, more people, and I guess as the years go by and the percentage keeps going down, more people may be looking at Section 179 as an option. So I think it's just helpful to review the rules, because we really haven't been in those as much lately. So unlike bonus depreciation, Section 179 is subject to annual dollar limits. So the maximum annual amount you can deduct under Section 179 is about $1 million. It fluctuates for inflation, so it changes, but that's a rough number. And then for 2022, the asset addition limit is about 2.7 million, meaning if you had more assets than that added, then it'll decrease the amount of 179 expense you can take. So if you're a type of business that has millions and millions of asset additions every year, 179 is really not an option. If you're a smaller business that has less than that, then it still would be. But those limitations are important. The asset must be used for more than 50% business purpose. And we see that come into play sometimes with vehicles that people use part for business, part for personal, that kind of thing. And then this is maybe the biggest one in my mind is Section 179 cannot be used to create a business loss, meaning it can't decrease your business income below zero and still be deductible. You can take it. I mean, you can still use it, but it would just limit what you could actually deduct in the year for tax purposes. So people in that situation would end up with a Section 179 carryover to future years, which they could deduct as long as they had taxable income. Bonus depreciation wasn't like that. It didn't have that kind of taxable income limit. So that's a limitation, and that sometimes changes people's mind about, well, do I want to take this year, or do I just want to use regular, the longer depreciation.
Right.
So those are just some limitations that I think we'll see come back into play as bonus depreciation phases out.
So you probably in the last half or last quarter of the year, you probably want to look at your asset additions for the year, particularly starting next year.
Right.
Really kind of make an analysis as which route you want to go. Can you do bonus depreciation on the 80 and then the non-allowable bonus depreciation on the 20, you can then do 179? Is that the theory?
I don't think so.
Okay.
It's been a while since I've looked at that, but I don't think so. But that could be, we could look into that for sure. But the 80% may not deter people as much from bonus depreciation as maybe the 60 and the 40 would.
Yeah.
So we'll probably have to be looking at that a lot more.
Gotcha. So
Yeah.
I guess it's been 5 tax years or 4 tax years since it's really been an issue on 179.
That's right. That's right. And that's why reviewing these rules is helpful for everybody. But I do remember when we would have 50% bonus, that was very common for a while. So we're kind of almost back in that boat again.
Right. And most of the changes in that 2017 Act were on a 10-year sunset provision, right? So
That's right.
That's really what we're into now, right? It was 5 years of 100% bonus and then 20% drop off each of the next, get to zero in the 10th year.
That's right. And of course, all that's subject to change. I mean, we could get new tax legislation tomorrow in theory, and that would change all that. But that's the way it's written out now. And, depending on economic conditions and that kind of thing, and what the needs of the country are, it is possible that we won't see that phase out as it's written now, but that is the way it's written now. So we'll just have to.
We have to play by the rules they give us for today, right?
That's right. That's
Okay.
right.
Any other big things from a business review perspective before the end of the year?
One thing that can be helpful, depending on your method of accounting, is to review some of your asset items. We've talked a lot about fixed assets and equipment, but another thing that you can look at is accounts receivable, inventory. If you're on the accrual basis, and you might want to look at your accounts receivable, see what's collectible. If you've got some that's not collectible, you can write it off. Same with inventory. If you're carrying a lot of inventory that is not usable for one reason or another, getting a good inventory count, getting a good assessment on your accounts receivable can help you out too, just so that stuff is all cleaned up. Of course, depends on your method of accounting, depends on your tax situation, but it's, even if you're on the cash basis, that's still not a bad idea to look at that kind of stuff and just make sure it's cleaned up by the end of the year, just so you've got some good year-end numbers for your tax return.
Right.
Same with payables, really. I mean, if you've got payables that are, incorrect on your books, getting that kind of stuff cleaned up, getting your bank accounts reconciled, getting all that stuff, and that will help you when it comes time to do your tax return. It'll save you a little time in the in the next year. You can get your tax return done a little quicker.
Gotcha. Awesome. Those are some great tips. Those are not just business tax related tips. Those are good business hygiene tips as well.
This is true. Keep your books clean. That's right.
I mean, you can run or you can go count an inventory whenever, just to make sure you're where you think you are.
Sure, absolutely.
Yeah. I mean, I know that we do it in our technology business. We do that on a quarterly basis, just to make sure we've got everything kind of lined up where what we think we have is still available and all that other stuff.
Yeah, that's a good plan.
All right. Any other sort of business planning for year-end tax planning items from your perspective?
The only other thing I guess to note is bonuses. A lot of people pay bonuses to their employees or to the owners or whoever at the end of the year. So that's one thing you can consider if you've had a big year, to get those bonuses calculated and get them paid and that kind of thing. That can be good. It's good for employees,
Right.
But it's also good from a tax perspective too, depending on your situation.
Gotcha.
Yeah.
And people like to have extra money around Christmas time.
Sure.
Yeah.
Everybody does. Yeah.
Gotcha. So from the business perspective or business owner perspective, is it a case where if you were going to pay it in January or February, you're just really moving it up, sort of like those charitable contribution things we talked about in the individual? Is that really the thought process there? So you get it in the tax year so you don't have to pay taxes on it?
Sure. Yeah. That's the idea. You can accrue it and even if you pay it later, in the first 2.5 months of the next year, to go ahead and get it in this tax year,
right,
is a good thing. And go ahead and get that deduction now. Most people like the deduction now as opposed to the next year. So that's a good strategy.
Gotcha. So the rule on when you have to disperse the cash is 2.5 months after the end of the year if you accrue it at the end of the year.
Right. And there are some stipulations on that as far as, owners and that kind of thing, but that's the general rule. Yeah.
Gotcha. Well, those are some great tips.
Well, thank you.
Any other final thoughts or comments? Or this doesn't have to be final thoughts if you got plenty more, however you want to do it.
That covers what I had in mind for business planning.
Okay.
Yeah.
So we've got, as I mentioned sort of at the intro, we've done an individual year-end tax planning ideas and strategies. And this was obviously the business end of that. So if you're interested in either one of those, certainly check out the feed on both of those things. And we appreciate you listening today. And if you want to follow us on YouTube or any of your audio podcast channels, please do so.
Yes.
Thanks again for being here.
Thank you.
Alrighty. Bye-bye. If you would like us to help your business or would like to suggest additional podcast topics, simply send an email to info@jmf.com.
And don't forget to subscribe to our podcast on YouTube and your favorite audio podcast apps.